Hello, you're watching Dukascopy TV, always bringing you the very latest in FX analysis. I'm joined now by Rani Jabban of Arab Bank. Rani, thank you so much for coming in today.
Thank you for having me.
Okay, so to kick things off, Rani, what for you have been the key FX trends for 2013?
Well, there's been four predominant themes in 2013. The first one is the yen weakness, which lost 14%. If we look at total return against dollars. Then the weaker commodity currencies, with the Aussie obviously dropping around 8 to 9%. Then we had the commodities themselves, so the two are linked. And especially the precious metals, with a drop of 34% on silver year to date and 25% on gold. And afterwards it started in June this year when Bernanke first hinted at tapering, was the emerging market FX blowout, especially currencies like the South African rand, the Turkish lira, the Indian rupee, etc.
Now, staying on the US dollar for a moment, and US dollar strength has really been prevalent in Q4 trading. Now, is this simply a correction, having tested a 17-month low on the dollar index in October, or does this form part of a larger trend which we're likely to see evidence of in 2014, do you think?
We think it's part of a larger trend that will certainly be confirmed and will be evident at the end of Q1 2014. So we more or less, with the end of the year, especially against the euro and some reserve demand and diversification, we're going to see the euro holding relatively well supported against the dollar. And in the first few months of 2014. But we think the major trend that we exposed, the themes that we just spoken about earlier, will continue in 2014. And on top of that, we'll have dollar strengths materializing against the G3, sterling, euro, Swiss francs. Dollar yen obviously is already weakening.
In terms of sort of other losers of 2013, then EM currencies really had a bit of a tough year. We saw a lot of volatility, particularly in the Brazilian real, for example. Are you anticipating a rebound into 2014? And also, you've already touched on the Aussie dollar, but what can we expect there? Again, another big underperformer.
Yeah, the Aussie dollar was a big underperformer this year in 2013. We think it will continue in 2014, but won't be as evident as it was this year. So the relative performance of the Aussie won't be as weak as the other currencies against the dollar. We think Euro Aussie will drop down to 86 still, compared to, we are now just below 93 at the moment. Because mainly we think that the Reserve Bank of Australia is going to be on hold for a long time, much longer than what the market is expecting. However, the internal demand and growth in Australia won't be as disappointing or as bad as we've seen in 2013. There will be a slight improvement there. But still think that there will be pressure on the Aussie. So down to 86 probably at the end of the year. On the emerging market currencies, as I said, I think the trend that we've seen already since the second half of 2013 will continue. There'll probably be more differentiations in terms of which emerging currency is going to be is going to be benefiting from the conditions that will prevail in 2014. We think that currencies who are more linked and have less problems in terms of current account deficits or high inflations and are more exposed to developed markets like Europe, USA, etc., and Japan will benefit more. So these currencies are mainly the Eastern European currencies, the Korean won and the Taiwan dollar. The other currencies, well, depends about their credibility and if they increase their monetary policy, if there will be a tightening, if it will be judged credible or not. But more or less, these currencies will be the Brazilian real, South African rand, Turkish lira. They will continue to be under pressure.
Coming on to the euro then, how is euro deflation likely, euro area deflation even, likely to impact the single currency? What do you think the ECB can and also is likely to do in 2014?
Well, we've seen yesterday, I mean, there was some news on Bloomberg about negative interest rates, so the market started panicking and selling the euro. It was denied by Draghi this morning, but we still think that disinflationary pressures are there in the Eurozone. We can see it from the output gap, we can see it from the inflation data, and with the strengths of the euro compared to these relative strengths of the euro, we think that the central bank is quite worried about this phenomenon, and they have different tools to be even more accommodative than they are at the moment. We mentioned the negative interest rates, but we think there's more problem or disadvantages linked to this solution than advantages. There was another round of LTRO. We think they will go down the path of more of quantitative easing, as the Fed did. So that will also put pressure on the euro.
We've spoken quite a bit about some of the negatives and some of the underperformers. But looking ahead then, what's going to be your pick for trades next year?
I mean, next year, definitely continue to be short yen. We like to be long Norwegian krone against yen. Weaker Aussie, as we said. We think if you play the crosses, shortening the Aussie against the Kiwi, we got some value there, because New Zealand, the Reserve Bank of New Zealand will probably be more proactive and will be the one that is giving signals of hikes earlier than the Reserve Bank of Australia. On the emerging market, as we said, we can play the diverging view that we have, so being long Polish zloty or Czech koruna against South African ZAR or Turkish lira. These are the trades we're looking for. We're also looking to accumulate short euro dollar above 136.50, between the 136.50 138 zone, and long dollar Swiss below 91.
Rani, thank you so much.
You're welcome.
That's all we've got time for right now, but I'll be back shortly with another exclusive interview for you, so don't go away. Goodbye for now.